All right, everyone, I am excited to share some amazing news today. I want to share good news that affects dividend growth investors. Investors like myself who invest for dividends that can be used to pay the bills. I have three pieces of news today that I want to share. This is news that affects my personal stock portfolio and also three companies that I own in my personal stock portfolio. So let's get started. So I did another video like this recently, I'll link in the description below, and I got really positive feedback from the community, so thank you all for speaking up, for sharing your opinion on that video. And so I wanted to do another one. I want to share some news that affects dividend growth investors. And it's turbulent times right now. There's been a correction. Is this correction part of the next stock market crash? Is it foreshadowing what's to come? Personally, I think it may be. I think there will be a crash happening. I think it may be beginning. Now, will the bulk of the crash happen in 2018, 19, 20, or 21? That I don't know. I have no idea over the timing, but I certainly think within the next 3 years or so, there will be a crash or a larger correction than we've already experienced. That being said, in my opinion, regardless of what's going on with the stock market goes up, stock market goes down, there is always good news for dividend investors because I am investing for cash flow. And so as share prices go down, yields go up, and regardless of what the stock market is doing, the companies that I own, these are world-class companies, they always seem to be doing something to delight me. They always seem to be doing something to thank me for being a shareholder. They always seem to be doing something that just puts a smile on my face. And so I want to start with Cedar Fair. This is a stock that has just corrected, and they have corrected quite a bit. They corrected because a few months ago they announced, hey, attendance is down, and attendance is down year over year because this year the weather is not great. We are facing inclement weather, and the stock plummeted. I took the opportunity to buy, and recently they just announced earnings, and their earnings, in my opinion, were awesome, and they're great news. And so they announced, despite attendance being down 0.5% year over year due to inclement weather, that revenue is up 2%, adjusted EBITDA is up 1%, and net income is up 11%. The reason net income, by the way, is up so much is because of tax reform. What really excites me about this report, though, is the fact that despite the inclement weather, revenue is up 2%. And the reason revenue is up so much is it's supported by out-of-park revenue. Their out-of-park revenue is actually up 8% year over year. And so I love that out-of-park spending is up. It's supporting the company. Out-of-park, by the way, means they own real estate. This is a real estate company, by the way. They're an amusement park company, but they're also a real estate company. And out-of-park revenue, what this means is they own hotels, they own real estate near their theme parks that can generate revenue. And they're smart. They're developing this real estate. They're enticing customers to stay at these hotels, and the customers are spending money there, and they're enjoying it. They're having a good experience. And so the out-of-park revenue, in my opinion, is so key. It's so key. I'm so excited to see them focusing on that. Now, what is the best thing about this Cedar Fair earnings, perhaps, is that they raised the distribution. They raised the cash distribution by 4%. This is a master limited partnership. They, if you own units, they're not called shares, they're called units. One receives a K1. This creates some complexity for taxes, but I'm used to dealing with K1s. I'll link in the description below. I did a whole video on Cedar Fair, so I don't want to get into all the details here. But the distribution now being 0.925 per share or per unit quarterly, it means it's 3.7 per unit per year. I take the 3.7, I divide by the current share price of $52.15. The yield right now is an incredible 7.09. 7.09% starting yield. I love this company because one, I just love the company, but two, the share price is attractive right now. Despite this good earnings release, despite this good news, stock has not gone back up. gone back up a little, but they got hammered. They got hammered because of the attendance issue, and then they got hammered because of this market correction. And so it's come back up a little on this news, but it's still in a really good range. And so I am thinking I'm going to buy some more shares of Cedar Fair, probably either tomorrow or next week, as long as it's still in this range. I want to add a little bit more to my position. Didn't get to do it in October because I only have so much budget to invest each month, but with my November investing budget, I look forward to making Cedar Fair a priority if the share price is still at the same price, because boy, I love everything about this story. The other thing I like is I just look like yield on cost 10 years out. Management has said we want to raise the unit distribution by 4% per year in perpetuity. Doesn't sound like a lot, but because the starting yield is so high, it actually makes, it's pretty meaningful. So I start with 7.09. I model out 4% increase for 10 years. And the way I do this actually is in Excel. I just take 7.09% multiplied by 1.04 to the power of 10. And that represents the 4% increase each year for 10 years. If they can do that, which management said they would like to, the yield on cost 10 years out will be a 10.5%. Simple yield on cost without reinvesting dividends. 10.5%. I like that. I like that a lot, knowing that, because this is pretty predictable in my opinion, knowing I'm going to get there in about 10 years to a 10% plus yield on cost. Love it. So I'm going to be buying more of these guys, and as long as the share price stays, the unit price stays lower, it stays in these low 50s, I love it. I want to take advantage of that because at a certain point it will go back up in my opinion, unless we just have the market crash right now, or if this correction is just kind of a slow decay over time. Maybe it'll stay low, maybe it'll go lower. I don't know, but I just kind of feel at these values, especially given this news release on this favorable earnings report, that it's a reasonable time for me to add more. And I am so excited about that. So great news, great time to be a Cedar Fair shareholder. Anyways, more good news. Boy, you have been waiting for this one. You guys have been asking, so thank you for your patience. IBM. I've done a bunch of videos on IBM. I will link in the description below. I own shares in IBM. And IBM decided, hey, we're going to acquire Red Hat. I think that this is great news. I'll tell you why. But first, let's just look at it. The company keeps falling. We know that. They had earnings that were kind of lackluster. Revenues were down year over year, just slightly, but the street hated it, punished the stock. Also, we know that the market just corrected, and with this market correction, IBM went down more. Then they acquired Red Hat, or announced their intention to acquire Red Hat. Whenever something like this happens, by the way, the company making the acquisition will go down. So IBM went down more, trading at $116 now. In my opinion, that's a bargain basement price for IBM. That being said, I'm also being diligent here not to add too much too soon because I have goals. I don't want IBM to be more than 2% of my portfolio. Right now it's at about 1.6, so I have no risk of it going over 2. But I just feel kind of like I've added a bunch to it here. I have don't want it to be more than 2. I want to add more. But I want to make Cedar Fair a priority, so I'm going to add my Cedar Fair first. Maybe in later November or December, I'll pick up a little more IBM this year. But the way I'm looking at it now is I have to be true to my goal of keeping IBM 2% or less. And so where it is now, I kind of feel good, but I'll add a little more. It's just not the same priority for me right now as a Cedar Fair because quite frankly, I just added to my IBM. And so I want to share the love. I want to not just average in one stock. I want to diversify. And so that's how I look at it. But the fact that I'm not adding more here has nothing to do with my confidence. It's more just asset allocation, risk allocation. I like this coming year and I like it more knowing that there's this Red Hat acquisition. So the dividend per share is 6.28. The yield is 5.38%. Great starting yield. And here's what's interesting. IBM's market cap is $106 billion. It's a little low here. I think the company's probably worth more than that. I think it's a deep discount. Forward PE is less than 10. Dividend yield that's well covered by earnings is 5.38%. Red Hat, they're paying $34 billion. They're paying roughly 1/3 of their overall value of this company to purchase Red Hat. That is a lot of money, especially when Red Hat, the economics of the company are very different than IBM. The earnings of Red Hat, the PE multiple of Red Hat, Very different. When I kind of calculate Red Hat's forward PE, I was just trying to ballpark it. I get somewhere around like a 50 to 60 range. So 50 to 60 is kind of the PE at this purchase price level that they're buying Red Hat. It's a lot different than a PE below 10. And so anyways, also this is the biggest software acquisition of all time. That's pretty impressive. Here's the deal. Amazon is number 1 in the cloud. Microsoft is number 2. IBM is number 3. IBM wants to be number 1. I want IBM to be number 1. With Red Hat, there's a lot of synergy with the IBM cloud. IBM has roots in open source. Red Hat is open source. The cloud, the opportunity for Red Hat to bring IBM into a number 1 position or number 2 position in that cloud race is real. That's why I like Red Hat. And so, by the way, I am starting to learn more about the technology. I'm still researching the technology. If you are a technology person and maybe you've worked with the IBM cloud or you know a lot about the cloud, you know a lot about Red Hat, please comment in the description below or in the comments below. It will greatly enhance this community. It will really add value for everyone in the community. So if you want to give back, you want to help out your fellow investors here in the PPCE and community, share your knowledge. We would love to hear it. So IBM, they're going to be they're trying to be the number 1 leader in what they're calling the hybrid cloud. I'll tell you an interesting tidbit. IBM was saying, their executives were saying, they did a poll, they did a survey of their customers, and with their customers, they are saying only 10 to 20% on average of their computing processes are happening in the cloud right now. The rest are happening in traditional mainframe computers, traditional computing ways. And so the opportunity here is the cloud is going to keep growing, and IBM knows this. This is strategic for IBM. IBM wants to command the cloud. They wanted the best solution in the cloud, and I think the Red Hat acquisition, while expensive, it places them in a really good position, in my opinion. Maybe not like immediately, but I would say for someone who is a long-term investor like myself, who's looking 10 years out or more, I think that this is a great acquisition. I'm glad that IBM made it. Or is making it. The question though becomes, are they overpaying? Of course, absolutely. Without a doubt, they are overpaying. It's kind of though, the way I look at it, like buying a house in a really good location. If you want a house, you want to buy it in a good location because location is everything, there's going to be multiple offers. Around here, oftentimes, there's been times when there's been like 20 offers on a house. And so what happens with all these offers is the prices get bid up and the person who wins is typically overpaying. But looking in the long term, are they really overpaying because prices may continue to go up? The way IBM, I think, is looking at this is, look, if they don't get Red Hat, someone else is going to get Red Hat. Could it be Amazon? Could it be Microsoft? Could it be someone else like Google? It could be anyone. There's a lot of players in this cloud space. IBM wanted to win. They wanted to get this acquisition done. They paid the price to do it. Time will tell if they paid too much. They're certainly making a large bet. I'll tell you this. They are paying way too much for this to fail. One of the companies, by the way, I know some of you own, I don't own Cisco. Reason I don't own Cisco is they made some acquisitions over the years that have not worked out. And basically, I look at that as just kind of like throwing away money. It's wasting money. It's wasteful to acquire a company and then kind of discontinue that company. And I noticed Cisco did that over the years, at least with some of the acquisitions I was following. So the question here becomes IBM $30 plus billion, or 34 billion. This cannot fail. This cannot fail. This has to work. If this does not work, this company is in real trouble. And so it adds an element of risk. But quite frankly, I think they need to take that risk because do you really want to be number 3 in cloud? I don't know if you want to be number 3. Number 1 or 2 is okay, but I don't think you want to be number 3. And so that's how I look at it. What else? Management said this is going to boost revenue growth, gross margin, and free cash flow within 12 months. I think it'll be in month like 11 or 12. That's when it's going to start happening. But that's what they said. They also said it's going to support the growing dividend. So IBM has no plans here to cut the dividend. They want to support the dividend. They want to support a growing dividend. They are going to slow down their share buybacks in 2020 and 2021. Smart, because they have to pay this down. They said they're going to use cash and debt to buy this company. They already have a bunch of debt. I'll link in the description below. I did a whole video on this. But yeah, IBM, they have a lot of debt. There's no way around it. 75% of the debt, plus or minus, is loans that have been made. They're a bank. They finance their customers to buy their product. The other 25% or plus or minus of their debt is real long-term traditional debt. This is going to take their debt to a whole new level. Can they make it through this? I think so, but it creates an element of risk. Hence, I will never have more than 2% allocated unless the thing just grows so much that it becomes like a really big position because it's flourished. That, of course, is a good thing. I never sell. So the way I look at IBM is this is good news, great news, exceptional news, but it comes with some elements of risk, the main risk being debt, and I would say execution. It has to work, but I'm not worried about execution. Knowing what I know, I have a computer science background, Stanford computer science degree. I have a background in computer science, so I understand enough about this stuff just from the reading I've done to see, wow, this is good. This is a good fit for IBM, real good. So I don't think that the execution is going to fail. Where I think it could potentially fail, though, if I saw any risk out there, is just a lot of debt, rising interest rates. Got to keep an eye on that. And also I see just a pace of execution. The execution, it not only has to work, but it has to be fast. And so they got to be fast, they got to be nimble, they got to be scrappy. I hope the Red Hat culture brings a lot of that to IBM, which may be a more traditional business culture. So a lot to be figured out, but I'm super excited about it. I look at this as really, really good news. By the way, the non-GAAP earnings for Red Hat, they were only $540 million. So again, they are paying for a company that is growing, not a company that is earning a lot of money right now. And so certainly they're earning money, that's a good thing, but they are bringing growth to IBM, and hopefully IBM's existing customer base can now benefit more from the hybrid cloud, from the Red Hat solutions that they're going to bring to the table. So what else? Got more good news for you. So Kimberly-Clark. I started this year off with two goals, and one goal was to add more money to Procter & Gamble. The other one was to add more money to Kimberly-Clark. Procter & Gamble, the ship has sailed, the stock has been flourishing. I'm done buying Procter & Gamble this year, and I'm happy that I added a bunch to it earlier this year. But look, we're in November now. I'm assessing the year. I'm assessing my success with my goals. And I'll tell you, I lost a little of focus during the year. I bought a lot of companies. Cedar Fair, net new position, by the way. General Mills, net new position. And I don't regret it at all. I was opportunistic. I took opportunities. I've been meaning to get into Cedar Fair for a long time, for actually over a decade. General Mills was more like spur of the moment, but I'm happy that I got into it. I wasn't really looking to get into General Mills. It was more a function of opportunity. But anyways, you guys have been following the channel. You know this year I bought a lot of stocks. That said, I set forth at the beginning of the year to buy 2 stocks. So I lost a little bit of focus, but I also have 2 months left, and I'm proud of what I did with Procter & Gamble and Kimberly-Clark so far. But this month, in November, I want to buy more Kimberly-Clark, and the good news that I'm excited to share is that the share price, it has come back down. So Kimberly-Clark is trading at $106. The 52-week range is from 97 to 123. So it's not at the bottom of the range. It's kind of towards the bottom, in the middle, lower end of the range. I'm happy about that. The dividend yield right now is 3.77%. I would rather buy at a 4, but at 3.77, I'll take it. Their dividend per quarter is $1. Add those up, it's $4 per year. $4 divided by 106.03 comes to the 3.77. Their recent earnings report I thought was reasonably good. They topped analyst expectations on EPS. They came in at $1.71 versus the $1.63 that analysts expected. Sales fell 2%, but that was largely due to currency fluctuations. Looking at organic sales, which are adjusted for currency, they were up 1%. And so full year, they're looking for 6.6 to 6.8 EPS. Here's where it gets interesting. We're almost done with the year. I take Kimberly-Clark's guidance at face value. If they come in at 6.6, the PE is 16. If they come in at a 6.8, The PE is a 15.59. I like buying Kimberly-Clark at a 15.5 or 16. I like that a lot. And so the good news here, quite frankly, is I set out this year with some goals. I'm in the last quarter here, the last innings of the year. I want to reach my goals. I want to put more money to work. I want to buy more Kimberly-Clark. Thankfully, the company is where it needs to be for me to feel good buying it here. I feel like it's a reasonable value, not a steal, but it's a value where it's a price where I feel comfortable buying it. And the earnings, quite frankly, they were kind of blah, some good stuff about it, but kind of flat, kind of neutral, at least. That's my take on the earnings. Whereas with Cedar Fair, I was like, oh yeah, these are good earnings. And so that being said, this has all created an opportunity. The earnings are not so exciting that it skyrocketed. And with the recent correction, it's come down. And so I'm excited to actually hit my goals this year, to focus here a little bit in November on Kimberly-Clark, although as I did mention, I want to pick up some Cedar Fair too if it stays at these lower levels. So the challenge I have for all of you out there is, do you have financial goals this year? Do you have personal goals? Do you have fitness goals? Do you have job-related goals, career-related goals? You still have 2 months. Think about those goals. Make sure you hit them. The other thing that I want to bring forth is I am taking right now core positions really, really seriously. So IBM, smaller position, kind of maybe a bigger, smaller position, but that's in the small bucket. Maybe it'll make it to medium bucket, kind of small, medium bucket. Cedar Fair, I want that to be actually a larger medium position. I don't want it to be core, but I want it to be big in the medium bucket. I like the company. Kimberly-Clark, core position. Is it a top 10 position? That I don't know. I've already done top 5. I'm going to do 6 through 10 before the year is up. Will Kimberly-Clark get in there? If it does, it may. I actually think it might be more like 11 or 12. Time will tell. I'm having a hard time. It's a battle. It's a battle of my 38 positions to make these top 10. I'll tell you, the reason I'm looking at these top 10 so much right now is next year, I'm already thinking about my goals, 2019. I want to really focus on my top 10. And not only do I want to focus on my top 10, I want to almost focus on Pepsi. Like literally, I'm just going to buy. I need Pepsi to reach its position size. It's too small. And so I'm going to focus though on all top 10. This year, I focused on Procter & Gamble, Kimberly-Clark, which are core stocks, but I also spread the love amongst a bunch of stuff like General Mills and Cedar Fair as well, and a bunch of other stocks, IBM as well. A lot of stocks I bought this year. If you've been following my channel, you'll know all about all of the ones I've been buying this year. And so I'm starting to close out the year. I'm trying to hit my goals while thinking about next year, setting myself up for success next year. And so that's where I'm at with all this. But here's the deal. Markets go up, markets go down. In my opinion, markets may be going more down than they have been going into the coming years. I just think it's about time. That being said, when I look at individual companies in my portfolio, there is always good news. And it's so good to be a dividend investor because these companies impress me. These companies delight me. These companies reward me as a shareholder. They pay me. Look, another one, news number 4, United Technologies, my number 4 favorite stock of all time. They just raised their dividend, I think it was 5%. They gave me a 5% raise for doing nothing other than being a loyal shareholder. I love that. And so what I'm saying is, even if the market is down, I love dividend investing because on a company-by-company basis, there's always something good. There's excellent news out there for all of us. And so before I leave today, just a thug life moment. Thug parenting, by the way. Huggies. I gotta love Huggies because Kimberly-Clark makes Huggies and I invest in Kimberly-Clark. I like to invest in companies that I support. I support their products. And I'll tell you, we have 2 young children. We are blessed family here, and I participate in changing diapers. I change diapers all the time. Real men, real thugs, no problem changing diapers. And so I just like, I love this Huggies brand, and I like the fact that that is a Kimberly-Clark brand. And so going into the end of this year, 2 months to go, this is one of the reasons I'm excited just to to raise my Kimberly-Clark position even more. All right, everyone. So thank you for watching the video today. If you enjoyed the video, you want to support this channel, you like this community, please comment below. We have a thriving community. Like the video, subscribe. It all means the world to me. It's the best way that you can thank me. Before I leave today, in terms of full disclosure, I am long. I own the stocks mentioned today. I own Cedar Fair, ticker symbol FUN. I own IBM, ticker symbol IBM. I own Kimberly-Clark, ticker symbol KMB. I own United Technologies, ticker symbol UTX. I own Pepsi, ticker symbol PEP. I own Procter & Gamble, ticker symbol PG. And I own General Mills, ticker symbol GIS. I am long. I own all of those stocks in my personal dividend stock portfolio. Also, before we leave today, a friendly disclaimer. I'm not a licensed investment advisor. Today's video is not investment advice. This video is just for your fun and entertainment. If you are going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor first. Literally, I'm just here on YouTube sharing my personal journey for fun and entertainment purposes. Hey everyone, I will see you all in the next dividend investing video.